Good morning, Bay Area. This is your Bay Area mortgage planner, John Payne, and this is the Rate Watch Now Daily Update Report. Happy Monday, everyone. I hope you had a great weekend. I have one thing to say about this weekend is, how about those Redskins? Sorry, Cowboy fans, I had to put that out there. This is a snapshot of the mortgage-backed securities market from Friday. We started out at 0.41 and we ended up at the same place with a lot of volatility going on in between. What's going to make rates go up today? I have that the Dow rise continues. This is of no concern to me because this will stop soon based on what's going on down here, and bonds will respond accordingly, and I'll get back to this in a minute. Global bank regs, it looks like that is going to pass. These regulations look a lot like the U.S. bank regs. Supposedly this is easing concerns over the global meltdown or concerns of global meltdown. But I don't see it stopping anything that's already coming down the tracks, folks. These regs really won't take a strong hold until end of first quarter of 2011. So if there's something already on the tracks, nothing's going to stop that collision. Next thing I have is the growth in China. Now, China's growing, and that's great for China. However, the last time China was growing, the U.S. market was selling off, and the economy was horrible, while we thought China was growing. Now, the U.S. got some boost from it when we thought that China was slowing. So this is really not good for bonds or good for our economy. What's going to make rates go down? I have nothing on this today. Huge news week. Retail sales. We have supply. We have PPI. We have CPI. The Philly Feds. We have a huge news week, and I think that you're really going to see particularly the Empire Survey, everything here that I look at is market changing. So we got a huge news week ahead of us. So far, this is what's going on in the mortgage-backed securities market. This was around 8 o'clock when I was updating all my slides, and you can see that we are starting to get back some of those gains that we gave up last week. This is how the lenders are responding thus far this morning, again around 8 o'clock. Today was a bond rollover day. What that means is that we stop selling 1 month's bonds and we move into a whole new month. And on that, the bond prices change. Now, this caused a 28 basis point rollover. So while the chart has us down here, if I add back in the 28 basis points, we're really up here. And you can see we've closed this gap. This is Thursday. This is Friday. We've closed that gap from Friday, Thursday to Friday, and I believe maybe not today, but soon, real soon, the next couple of days, we're going to close this gap here. The reason why I said it is because this is too far of a drop to not close all these gaps. We're going to come back up here and test this trend line, I guarantee it, because again, it's just too quickly of a descent, which is not normal when you go back and you chart how the market moves. Oh, slide, don't worry about it. Summary, there's no real news today. Trading is slow. We had a 28 basis point drop due to the bond rollover. If you need more information about that, please contact me. China is growing, but most likely it won't help the U.S. much. The global banking reform will not avert a crisis if one is already coming down the tracks. Here's something. PIMCO and B of A, and I'm more concerned with PIMCO than B of A, both see that the Feds are pushing 10-year Treasury bonds below 2%. Why is this important for us? Because when that happens, we're going to see rates down in the 3. We're going to be living in the 3% range. This will probably take effect in 2011, probably in the first quarter of 2011. That's all I have for you today, Bay Area. Please make it a great and prosperous day. If you know of anyone that could benefit from my morning updates, please pay it forward. Until tomorrow, Bay Area.